Good morning, everyone. It is Wednesday, October 19th. We had a pretty big movement into the close there yesterday with some good news or a rumor of good news out of Europe. And I'm going to recap what's going on the charts this morning and what I kind of feel is unfolding. Let's just take a quick look at the market momentum. This is on the barchart.com website, and the momentum here, what I like to look at is this momentum chart right here, this plus 2.47%. Now if we click this little chart on the side here, it'll pull up a chart showing us if the market had more or less momentum has thrusted too much to the upside or to the downside. Now what we're looking for here, again, I'm just going to repeat myself, anything over this 101 area and anything below this 99 level I consider to be an overbought or oversold condition. Now the recent volatility has picked up, so you can see the swings are much higher, but it still forms the same opinion in my eyes of what's going on here. So make a long story short, a couple days ago on Friday we saw the market close in an overbought condition. I'll just get a different color marker. An overbought condition up here, and we saw sharp pullback. We saw the market fall about 2.5%, almost 3%, and then we went to an oversold condition as of yesterday, the Monday at the close, and then we were in an oversold condition, and then yesterday, Tuesday, we saw a huge rally right back up, regaining that pretty much a 3% move to the upside. So you can see how these swings out with this boundary here are pretty significant at times. So we're in some volatile times. You can tell here just by this range is much bigger than the normal range, but you can see how this overbought and oversold condition can come into play for any short-term trading. Now if we zoom back to the other market momentum chart here, what I like to look at are stocks trading over the 20-day moving average. So if the majority of stocks are trading over the 20-day moving average, which is a short-term moving average, it means the majority of stocks actually have had a really strong run up, and they're trending higher and higher and higher above these short-term moving averages. So if the majority of them are trading above that level, then I consider to see the market getting a little overbought, and usually we'll see some type of intermediate pullback, meaning we could get a 3 to 10-day, 15-day pullback. So what I like to look for here is the reading to be over 75. Once it's over 75, we consider the market to be in a nice strong uptrend, but we have to be aware that we need to start looking to take profits. Now if I click this little chart, it'll pull up the chart of stocks trading above the 20-day, and simply drawing the line on here, anything above the 75 area I consider to be overbought. Anything around the 25 you can go to. Usually I look at the 20 or 15, but we'll just go with 25 or the 20 here. And anything around that level, usually you got to start to be cautious of the market rebounding and starting to move up. So you can see how you get these move down to these levels and you get nice bounces. And once you get down into these levels and you go even lower, obviously you get to a more significant low, and then there's a better chance for a strong move to the upside. So where we trade right now is we're trading right up here in this overbought condition, and a couple days ago we were trading up here. We had a pullback the past couple days. Yesterday we got a strong move back up, so we're still trading way up here in this 83% of stocks trading above their 20 period. This I have a feeling may go a little bit higher, but overall we are in an overbought condition. I wouldn't be surprised if we see some pullback down to the medium, the 50% level, and we'll reanalyze from there. But overall the market is a little overdone to the upside, and I want to be very cautious about getting into any position, because right now the market could extend and continue to grind higher, and of course it makes it extremely difficult to get into a long position, because we have seen the stock market already move up so much in the past few weeks that if it continues to go higher, you just don't really want to jump on the bandwagon, because at any time after a significant run like that, a correction is going to be very sharp. So it's easy to get caught on the wrong side. So that's kind of where we stand right now. The market is kind of running up and running away without any significant pause or pullback to allow anybody in. And that's one of the problems with just a problem with the market in general. When you get into a big sideways chop, which I'll show you on the daily chart, that we get an unwinding that could last longer than most people anticipate. So I'm just going to continue on with the SP500 here first. Now, if we just take a quick look at this is a 10-minute chart, and we're zoomed out about 1, 2, 3, 4, 5 trading sessions. And that overbought market momentum, when I was showing you the Friday close, we had a strong Friday close up here. And the momentum was telling us we were overbought. And then we saw Monday sold off very sharply down. We went right into an oversold condition. And then yesterday we saw the market move right back up that 3%, and it closed very strong. So we're getting this really strong volatility, price swings. You got to be very cautious what's going on. What concerns me here is if we just zoom out a little bit, what we've seen a strong move up. If I zoom out even more, you'll see how strong the move up has been. We've had a nice move up, and instead of actually pausing and pulling back, we're seeing a broadening kind of rising formation just like this, and volatility is picking up. And what this could be is a running correction, meaning it's got enough volatility in here, it's shaking people in and out of positions, and this is a correction in the market, and from there it could continue to go higher. So that is my kind of one concern here. It's very tough to try and buy into this because it is showing volatility, it is showing that it's overbought, and at any time you could get a significant drop right back down, and it could happen within 1 or 2 trading sessions. So it's very quick movement. So that's kind of where we stand right now, and I'm really hoping that we do get some type of pullback, or at least more of a sideways price action for us to hopefully get a long entry point. But again, we'll have to see how that unfolds. I do consider the market overbought up here, and I am anticipating a pullback, but I'm just keeping everybody aware that there is such thing as a more or less a running correction where volatility picks up, shakes everybody out, and then keeps on going, even though the price is on average is continuing to climb. Now, taking a look at the SP500 futures, here we've got yesterday's price action. I'll just zoom out a bit, zoom in a bit. Here we've got yesterday's price action. The strong volume here is regular trading hours, 9:30 to 4 Eastern time. We had a little bit of a dive in the morning, and then from there on it stair-stepped its way up and ground its way higher near the close, and then we had that news hit, and of course we had a huge pop in price and it pulled back. Since then we've pretty much seen the market just trade sideways, and there's a little bit of a bounce this morning, and it came back down, and a little bit of a bounce again there this morning with some volume, but overall it's been trading sideways, consolidating this big jump that it saw yesterday into the close. So it's going to be interesting to see how things play out there today. Now, stepping back to the currency, the US dollar index and futures for commodities. Here's the US dollar index. We saw that nice decline. We did have a move into this support zone, and we got that bounce yesterday, which broke out of this falling trend line and had some legs behind it. And then of course we got some news that Europe might be doing actually better than some deals were going to be made there, and we saw the US dollar pull straight back down. But this jump that we saw in the US dollar actually put quite a bit of pressure on gold and silver and equities there for a little bit, but then it quickly sharply reversed, and we saw money move back into commodities. So right now overall the US dollar index is trading down at support. It's kind of bouncing here. It could be trying to form a bottom because it is oversold. We'll have to see what happens here over the next couple trading sessions. If we just quickly sketch on here, you know, we've got we could see it just chop around here for a while. It could form a little bit of a consolidation, and it could continue lower, or it might actually start to form a base and work its way higher. So we'll just see if it actually ends up building some stability, breaking out to the upside, pulling down, having a nice move up, and then from there, which would be a pretty key resistance level, and it would be overbought on a short-term basis, we could see it sell back down. So there's a couple different scenarios, and again, I've been pointing this out for about a week and a half now, that the market is at one of those tipping points where it's a 50-50 bet what's going to happen. It's going to be a big move, usually in one direction, and you don't really want to just throw your money in the market. We kind of have to wait for a setup. Sometimes you don't get the you know, the bottom or the top in investment, But once you see the trend and it's clear and you've got a proper setup, then you get in and you get your piece of the pie and move on. So that's kind of where we stand. I'm not into trying to grab these tops and bottoms right now in this kind of market condition. Simply, you look at the stock market yesterday, and if you were to just zoom into yesterday's price action, for example, the market had a nice strong move up through the day, and in a blink of an eye, one little news story comes out overseas, and the market jumped about 2% in a blink of an eye. And it's just a very jumpy market, and it's headline driven right now. So you got to be very cautious of what's going on. So, anyways, the U.S. dollar has been selling down since yesterday afternoon, and that's what really helped boost the equities and commodities market. Crude oil. This is the 4-hour chart of crude oil. It has continued to work its way up. It is trading, in my opinion, right at a key resistance level, and it's starting to get a little bit overbought. And volume, it still has good volume, but overall volume has been declining as price goes up into this resistance zone. I do like it as a short setup, but it really depends on what kind of follow through we hear on the news that came out yesterday afternoon, if it was true or not, and see how today kind of plays out. But overall, I'm starting to like a short position here in crude oil for a potential dive down to the 82 area. Now looking at gold and silver, they both pretty much followed suit yesterday, doing the same thing. We had a pretty good move down in the morning, breaking out of the rising wedge, and they had a bit of a bounce. They're still trading lower, and overall they're still in a bearish pattern in my opinion. You just draw this rising wedge here, finally broke down, and then we saw a bit of a bounce, but it's still trading with a lower high, lower low, and in my opinion still looks a little bearish. Silver, pretty much the same thing. Here's the silver chart. We just zoom in a little bit here. Silver started to sell down a bit yesterday, and we had a dip down and it bounced right back up. But overall, depending on what happens going forward here, we're going to probably see a pretty significant move in either direction, and we've got to be very cautious again. In silver, a lot of people are seeing silver as a safe haven, and in my opinion, something that moves 30-50% in a couple trading sessions is not a safe haven for your money. And silver, when there is real fear in the market and people are unloading stocks and all their share positions, you see silver move down on those days, meaning that there's still a lot of speculative traders in silver, and when they're fearful, they sell everything, including their silver, to try and protect their capital, more or less. So you got to be very cautious with silver. Gold's a bit different. It does have a little more. It's definitely a safe haven, but it floats a lot better, holds up in value when the stock market actually crashes. Now looking at the bonds. The bonds are starting to unfold just as I pointed out a few weeks ago. I was looking to see what was going to happen with the price of bonds, and we had this breakdown of this level, and I pointed out now that we are we see a strong breakdown below that trend line. I wanted to see some type of sideways grind or pause, and that's what it's just starting to do now. It's starting to chop around into this bear flag, and I'm hoping that we can get some type of, the longer it goes sideways here, the nicer the fall should be. So I'm going to hopefully see if we can get some more sideways chop, and we'll take a short position for a potential next move down in the bond price. And of course, if the bonds go down, that means we're probably going to see the US dollar fall, and we're going to see equities rally, because money's going to come out of bonds and go into stocks, and that's kind of what should unfold if this scenario plays out. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.